What's up, everybody? Welcome to the Russell Journal. My name is Russell List. This is my story from 10 to $1 million. So far, so good. Had a big setback on Wednesday, as you can see from the thing, but now, as of right now, we've almost fully recovered to that. Looking to sort of put this up, at our 10% pace. Like to see this get up over, like to see this get up over 800 today. So as far as my trading goes, uh, most of my trades yesterday, I placed two early in the morning, did very, very well, were successful. I placed two in the afternoon, testing some possible new setups, but to no avail. The test either failed because it was flawed or the setup failed. So from what I saw. Uh, as of right now, all of the markets are up. They're up massively going into today. I'm sorry, give me 1 second. Let me see if I can get just a little bit. Yeah, it looks awkward. All right. Markets are all up today. There's two typical reasons for this. Basically, we've reached a couple standard deviations away from where we were at, uh, from where the mean. So if you can turn on, let me restart this. Okay, the price of a stock moves up and down every day. Okay, there is an average. It's not an average. It's called the mean. There's a mean that goes through this. Okay, and it's relative to the middle, but it's not the middle. Okay, but it's the mean. Okay, um, there are deviations of that mean. Okay, and there's a mathematical process to find out what one deviation is and two deviations are. I can't explain that to you, but I do know that these deviations are a thing. Yesterday, during our big sell off, we did reach down to nearly two standard deviations away. And there's basic rules within trading that when you get two standard deviations away from the mean, you either buy or you sell. If you get to upside, you sell. Okay. Uh, Here's the thing: is you take profit. That's really it. Okay. So here's the thing: we hit that second standard deviation. The mean came in really good. I'm sorry, man. I've not had enough coffee. All right. So because of that, there's possibility for a technical bounce. Okay. Everything is considered oversold, which means things are really cheap at that second standard deviation. Traders are going to come in and buy this, right? It's going to drive it up. It's going to look really good. Second reason for this is there's hopes of renewed talks with Ukraine, Russia, and the US. Okay. In the meantime, one of the things that we are definitely seeing is the stress test of America for the possibility of going to war. All right. China, now we know they've wanted to take back control of Taiwan for some time. They really want some of the stuff that's going on with Taiwan semiconductor, and they want a lot of stuff for the things they need. And apparently, it's not as easy as setting up a semiconductor factory. Is not as easy as simply buying one or building one. Did some research yesterday, talked to a few people. Apparently, those semiconductors, it takes about 10 years to put one of those plants together and all the equipment together to do the holographic imaging or holographic something to basically put in those semiconductors. Okay. All right. So apparently that's very difficult. All right. So China really kind of wants that. They don't want to spend 10 years building their own, but so we'll see. However, again, America's appetite for war has definitely really diminished. I think we're really tired of war. So who knows? Anyway, going into today, we've got Fed. We do have a Fed, some sort of school meeting. I don't know what that is. I know we got 3 different Fed presidents all talking. Brainerd, William, and I forget who the other guy is. They're all going to talk. So there could be some turbulence looking forward into that if they give any sort of indication as to raising those 50 basis points. But I would say more than likely it's going to be a big nothing burger, just like the FOMC minutes. None of them are, Bullard is the really hawkish one. He's kind of the bad boy of the team, and I think he's really aware of like what's coming, and that the Fed is going to be utterly powerless in order to when the recession hits the Fed without raising interest rates now, which causes the recession. Once that recession hits, they won't have the ability to go back into QE, and they won't have the ability to lower those interest rates anymore because they're already so near zero. So I'm with Brainerd in what he's trying to do, and I get it, and I understand it, and I know why he wants to unwind that balance sheet really, really bad because the yield curve is going to invert, and that will send us into a recession. And without the Fed to be able to back us up, you're going to have to count on the banks to basically uninvert that yield curve. Now, the banks have the money to do this. The problem is all their shit's tied up in securities. So that means they'll have to dump securities in order to reinvert to flip the yield curve back around. Anyway, great video you can watch on this is Steve Van Meter did a video about it yesterday. If you don't follow Steve, I highly recommend it. He is really on point as far as things go, and he is not a doom and gloom broken clock kind of guy. The broken clock guys, they drive me nuts. Steve has just a very good understanding of market structure and of how the stuff works. So I highly recommend Steve. Again, you'll hear me say that a lot. I like him, and I am going to do a video on the top 5 YouTubers to follow. My top 5 YouTubers to follow for this. So for stock market and financial information. People I've learned so much from as far as things. Okay, again, you can see balance up here, 741. Going into the day, we're looking and feeling pretty bullish on the rebound. So things should be sort of moving in an upward direction. I'm not counting on things doing some sort of drastic move up. Last week we saw some 6 and 7 point bounces. This week we're really kind of 3, 4, 5 points. So I'm not really expecting to see a lot of this moving forward today. Keep in mind that we are coming into a 3-day weekend. So somewhere in the end of the day, we may see a bit of a sell-off as traders do not want to hold their margin over a 3-day weekend. So, and then we're getting ready to come into the end of the month. So bills are going to be due. So I am looking for some traders. There's some of this is really, really functional stuff where people who have money in markets will move it out of the markets close to the beginning of the month just because they've got to pay rent and bills and things of that nature, especially from the retail side of things. A lot of the froth you're seeing in this is pretty much retail. So I know that most of my family that is invested in the market through some sort of 401k index, Roth thing, most of them don't move money every month. They just kind of move what they need, a couple times a year, quarterly. So, but there is a side of retail that does move money in and out of markets around bill paying time. So we can watch that. In the meantime, like I said, today I'll be on IWM, just watching that, seeing what it does, looking for some opportunities with inside of that. Next week we get earnings that continue a little bit, and we'll see how things go. Walmart knocked it out of the park yesterday, so that's pretty good. And so again, so for the Russell Journal, I'm Russell Liss. Thanks for watching, and I don't know. Let's do some sort of catchphrase.
I don't know what happened.
With what?
I did click live, but I think you clicked live as well.
I haven't clicked anything.
Oh, really? What happened then?
To what? I was on YouTube. I'm live.
No, we are live, but
I'm still streaming. They can actually see us. To
oh,
what?
okay.
I was on YouTube. I'm live.
No, we are live, but
I'm still streaming. They can actually see us. To
oh,
what?
okay.
I was on YouTube. I'm live.
We are live, but
I'm still streaming. They can actually see us.
oh,
You're still streaming me. I'm still streaming. They can actually see us. You're still streaming me. Maria, are you dead?